Welcome everybody, Doug McKay, anti-wallstreetguy.com on the 18th of March 2011. We are looking right now at a chart of the S&P 500 cash. The close on Friday, the 18th, was 1279.21. The overall trend right now in the equity markets, the way I see it, is down, meaning short. We broke this initial trend line here. If we bring the crosshairs in, we also broke 1300. As you can see here, and then we also broke the 50-day moving average. Now, typically what will happen is we'll test the underbelly here of the 50-day moving average. So we might get up to 1300. I would have to probably get above this level here. See the S&P cash get above this level of right around 1323, 1320 in order to remove our short position and get long again on equities. What do I think will happen? I think we're probably going to go down to 1200. This could possibly be setting up as a 1, 2, 3, 4, 5 down. 1 here, 2 up, 3 down, 4 sideways, 5th wave down. All right, so until we see further movement above 1300, for now the overall trend in the market is short. Let's take a look at the Dow. INDU, pretty much the same picture here. We broke this trend line. We broke support at 12,000. Heavy selling last week or earlier this week. A little bit of a recovery this week. Again, that's expected. We had option expiration today, so the volume was higher. But until we get above 12,000, the overall trend is still short. I'd really probably have to see it get above 12,250. Let's take a look at the NASDAQ. COMPQ took the biggest hit this week. As you can see, this is a very similar pattern. 1 down, 2 up, 3 is a longer wave down. If we stay below 2,700 next week in a 4th wave, the odds are we're probably going lower to 2,500. What would change my opinion on the NASDAQ if we got above this area here of basically 2764. Certainly if we got above 2800, we would get long the NAS in the Qs. Let's take a look at oil. So right now we've got the overall trend in equities down. Let's take a look at OIH. I'd want to see a close above 160. The overall trend right now is up. But if I was putting new money into the OIH, I'd want to see us get above this kind of left shoulder area here, or this area of resistance, and I'd want to see it close above 160. We closed today at 155. If we were to break below the lows on the 316 candle of 149.35, I would be out. But the overall trend right now in oil is up. This is a picture of the USO, United States Oil ETF. As we say in most charts, when it breaks out, we typically come back down and test that area where it previously broke out. This did it basically to the tick. We are above the 50-day moving average. If we were to break this low on 316 of 39.20, you can see off to the left there, I would be exiting USO. It looks very good if we get above 42.70. But the overall trend right now in crude is up. Equities is down. Let's take a look at a couple of the long bond ETFs. This was a trend line we drew in a couple weeks ago. We are above the 50-day. Interest rates are dropping. Anything tied to treasuries is going up. We talked about putting a stop here under this low. Right now we'd be moving our stop up right under this low, right around 92.11. We'll go 4 ticks under 92.15. But the overall trend right now in bonds is long. However, this is not a very clear chart. I've seen better looking charts. Let's take a look at it on a weekly basis. You can see again we broke above this trend line, and we also got above this area of 94. Okay, but this is, again, we could run into a little resistance here soon on treasuries. Let's take a look at, then we'll do some individual stocks. Let's take a look at gold. This is the GLD chart. We're looking at a weekly chart where the candles represent weeks. If we were to break the low that we put in this week and that low is 135.23. I would be exiting GLD. Now let's close this in on a daily chart where the candles are days. If you are not in GLD, I would not get in until we got a close above this area of resistance here. And let's just say that level is roughly around 140.31. 140.31, right in this level here. 140.31. Your stop would now be just above the 50-day moving average, which is the blue line, and we want to park it about 4 ticks below the 315 low, which would basically be 135.19. All right, so we're in a trading range here. We break out, add or initiate a position, we break down, exit. We currently are not in GLD in the managed accounts. What we are in is silver, which has outperformed GLD. However, we're running against a downward sloping trend line here. We closed today on silver pretty decent, but our stop will be 2 ticks below the low that we put in yesterday on the 17th. So we're going to move our stop up again from 32.33 basically to 33.21. All right, so we're going to move it up another buck, which percentage-wise is another couple percent here. Let's take a look at some individual stocks here. Now, again, equities, the overall trend right now is down as of the close on Friday. That could change next week. Oil is up, metals are up, and bonds are up. Let's take a look at Pfizer. This is a pretty decent looking chart here. We're building on bases here. We broke out of a base basically here. We broke out of another base today, meaning Friday here. Good volume. This on Pfizer, if you put a position on Pfizer, I would want to get out just below this low on 316, which the low was 1915. I'd get out at around 1911, but this looks like a decent chart here. Now, some of the big boys aren't holding up. We have put out a couple charts in the last 10 days on Apple. We did put one out yesterday. And I basically said, you know, until we get above 348, certainly 360, this is a negative looking chart. And it is. Look where we closed today with a pretty decent day in the Dow. We closed at 330 on Apple. So I think Apple is going lower. I would stay away from it if you're in it. And if it broke this low here, if you haven't already exited, I would exit it here. You could also look to maybe take a bite of it if we got down around 306. All right. Let's take a look at Google. Kind of looking at the leaders here, previous leaders. Google, again, down. Worst case scenario, like I always say, if you do not want to follow the charts to a large degree in terms of support, resistance, trend lines, RSI, so on and so forth, always exit if something breaks the 50-day moving average. Always exit if something breaks the 50-day moving average, which in this case Google did. You would have been out of Google right around 600 bucks, 604. Let's take a look at Amazon, another former leader, down. Again, when you break the 50-day, that's kind of a sign to sit up in your seat and get out. You'd want to be out at around 180. Closed today at 161.82. Do not try to catch a falling knife. And then lastly, let's take a look at Netflix. Netflix closed today at 209.40. We are above the 50-day moving average. We did come back down and fill this gap. However, what I would want to see is I'd want to see a close on Netflix above the high in this candle in order to initiate a new position, and also a high in this candle, which was on 316 just 2 days ago. If you're in it, I would exit if it broke 189. If you want to tighten that up a little more, I would say under the low of the 315 candle, which was 202. If you were to initiate a new position in Netflix, again, I would wait till it got above this area of resistance, which the high there was 223.37. All right, so in conclusion, you guys, most importantly, the overall trend, the way that I see it as of the close on Friday in equities is down, meaning short. Until we get above 1,300 and a little bit higher than that, we will maintain that stance of a short position. The current positions that we have in the managed accounts right now are the SH, which is short the S&P. We also have a nice chunk of cash, and then we also have a position in silver. That's it. Doug McKay, antiwallstreetguy.com, on the 18th of March 2011. Thanks.